Welcome back to the Pro Ticker Podcast, your Tuesday morning edition covering major financial magazine headlines, everyone. The market's been a bit of a roller coaster lately, and we've got some fascinating stories developing in the world of tech and global finance to unpack.
Yeah, it does feel like every time we catch our breath, there's a new twist or turn. Let's see if we can make sense of it all.
Well, to help us do just that, we have our resident financial expert joining us again, ready to connect those dots and paint the bigger picture. What stands out to you from this week's headlines?
Honestly, the sheer variety of what's happening is fascinating.
Yeah.
You've got Apple stumbling with their AI ambitions while Google is on a massive cybersecurity buying spree. Meanwhile, the energy market is sending mixed signals, and there's a fascinating push for UK pension funds to invest more domestically.
Okay, let's start with Apple. MarketWatch reported an 11% drop in their stock price last week, the worst since late 2022. And it all seems to stem from news that their much-anticipated AI-enhanced Siri rollout is delayed, possibly until 2026.
The Wall Street Journal captured it perfectly with their headline, Apple could stay in penalty box on AI delays. It's ironic, isn't it? iPhone sales have been a bit sluggish, but the stock was actually outperforming because investors were betting on this AI-powered Siri to drive future upgrades now that faith seems to be shaken.
So it's like they were banking on AI Siri being their ace in the hole, and now they fumbled it. What does this mean for Apple's future? Will they need to come up with another game changer to boost those iPhone sales?
It certainly raises questions about their strategy. Remember, Apple was already facing criticism for lagging behind in the AI race against companies like Google. This delay just adds fuel to that fire to stay competitive. They might need to find ways to innovate beyond just relying on hardware upgrades.
Speaking of Google, let's dive into this potential mega deal they're cooking up. The Wall Street Journal also reported that Google's parent company, Alphabet, is in talks to buy cybersecurity startup Wiz for a whopping $30 billion.
This is massive. We're talking about Google's biggest acquisition ever. It really underlines their ambitions in the cloud computing arena.
$30 billion for a cybersecurity startup? You have to wonder what's driving such a hefty price tag.
Well, cybersecurity is paramount for businesses transitioning to the cloud by acquiring Wiz. Google could gain a significant edge over rivals like Amazon and Microsoft in providing secure cloud solutions. This could be a game changer in the cloud wars.
But will they even be allowed to go through with it? I mean, wouldn't a deal this size face intense regulatory scrutiny, especially with the Trump administration's focus on antitrust issues?
Absolutely, it's a valid concern. Bloomberg actually ran a piece a while back about Google's $2.1 billion acquisition of Fitbit, which also faced regulatory hurdles. It'll be interesting to see how this one plays out.
Okay, so we've got Apple potentially falling behind in AI and Google making power plays in the cloud. What else is catching your eye?
Well, the energy market is giving us a bit of a head-scratcher on the one hand. MarketWatch reports that gas prices are heading below $3 a gallon, which sounds like good news for consumers.
Right, cheaper gas is usually a good thing. What's the catch?
The catch is that it could be a symptom of a slowing economy when economic activity weakens demand for fuel drops, and that pushes prices down. It's a bit of a double-edged sword.
So we shouldn't be celebrating just yet.
Exactly, and Bloomberg highlighted this further by reporting on a brand new French LNG terminal sitting idle because operating costs are too high. It's a paradox, high gas demand, a new facility ready to go, yet it's not being used. What does that tell you about the state of the energy market?
It definitely raises some questions about Europe's energy strategy. Are they overinvested in LNG infrastructure? Is this a sign of things to come?
Perhaps it's a complex landscape with many moving parts, and it's worth noting that according to Bloomberg, gold prices recently hit a record high above $3,028 an ounce. This suggests that investors are seeking safe havens amid global uncertainty, which could further complicate things.
It's all very fascinating. Okay, so we've got tech giants vying for dominance, energy markets sending mixed signals, and gold shining bright as a safe haven. What else should we be paying attention to?
The UK government's push for pension funds to invest more at home is an intriguing development. Bloomberg reported on this, mentioning a proposed voluntary 10% allocation to British equities.
Why are they pushing for this? What's the rationale behind it?
Well, there are concerns about retirement savings and a desire to boost domestic investment. The idea is that by investing more at home, pension funds can stimulate the UK economy and potentially generate better returns for retirees.
That makes sense, but are there any downsides to this approach?
Some argue that this could limit diversification and expose pension funds to greater risk. It's a delicate balancing act.
So for our listeners who might have UK pension funds,
Yeah.
should they be adjusting their portfolios based on these proposals?
It's crucial to consider your individual circumstances and risk tolerance. If you're unsure, consulting with a financial advisor who specializes in UK pensions is always a good idea.
Good advice. Now, before we move on, I want to touch on a few other interesting tidbits I came across first. Bloomberg mentioned a surge in insider buying in the S&P 500 that suggests some executives are feeling bullish about the market's prospects, even with all the recent volatility.
It's certainly an interesting signal, and MarketWatch reported that Netflix is experiencing success with its ad-supported subscription tier. This seems to be a winning strategy for them, attracting price-sensitive customers while generating ad revenue in a crowded streaming market.
And then there's PepsiCo's $1.7 billion acquisition of Shark Tank success story Poppi, which MarketWatch also covered. This move highlights their commitment to expanding their portfolio of healthier beverage options, particularly for those millennial and Gen Z consumers.
It seems like PepsiCo is betting on the continued growth of the better-for-you beverage market, which is a smart move. Those demographics are increasingly health-conscious.
Okay, so we've covered quite a bit of ground already. Apple, Google, energy markets,
Yeah.
UK pensions, and even a few quick hits on insider buying, Netflix, and PepsiCo. Anything else we should touch on before we move on?
We could delve deeper into some of those topics or explore other emerging trends. Perhaps we could discuss MarketWatch's article on the market's fear gauge, the VIX, and what its recent spikes might mean for investors. Or we could explore CNBC's fascinating piece on how AI is being used to help care for the elderly in Japan.
Those are all great ideas. Let's take a quick break, and when we come back, we'll dive into the VIX and what it tells us about market sentiment.
Sounds good. It'll be interesting to explore the psychology behind investor behavior in these volatile times. So before the break, we were talking about some pretty major moves in the market, and you mentioned the VIX.
Right, that's the SIBO Volatility Index, sometimes called Wall Street's Fear Gauge. And MarketWatch had a piece titled, "The Market's Fear Gauge Spiked, Then Slid." What that means for your stocks that I thought we could unpack.
It's a fascinating indicator because it essentially measures how much volatility investors expect in the market going forward.
And lately, it's been quite a ride.
Indeed, the VIX can spike quickly, reflecting those moments of heightened anxiety we've all been feeling as the market swings up and down.
I have to admit, I do get a little queasy when I see those big red numbers.
It's understandable, but the article makes a good point. Even for contrarian investors who might see a high VIX as a buying opportunity, it's crucial to remember that heightened volatility often means a bumpy ride, even if the market ultimately trends upwards.
So buckle up, it might be a wild ride.
Precisely. And this ties into the whole discussion about risk tolerance and having a long-term investment strategy if you're feeling overwhelmed. It's always wise to consult with a financial advisor to make sure your portfolio is aligned with your goals and your ability to stomach those market swings.
Speaking of long-term strategies before the break, we're also talking about the UK government encouraging pension funds to invest more domestically. Bloomberg reported on this in their piece. UK pensions investing 5% at home isn't enough, Aviva CEO says.
Yes, the government is aiming for a voluntary 10% allocation to British equities, with the goal of stimulating the UK economy and bolstering retirement savings.
But as we discussed earlier, this raises concerns about diversification and potential risks.
Absolutely. Putting all your eggs in one basket, even if it's your home country's basket, can be dangerous.
So for our listeners with UK pension funds, what's the takeaway here? Should they be shifting their assets based on these proposals?
It's not a one-size-fits-all answer. Talking to a financial advisor who specializes in UK pensions can provide personalized guidance. They can help assess the pros and cons of increasing exposure to British equities and make sure your portfolio aligns with your long-term financial goals.
Great advice. Now, shifting gears a bit, I was struck by a CNBC article titled, "The U.S. is falling behind China in nuclear fusion, needed to power AI."
It's a fascinating intersection of energy technology and geopolitics. Fusion energy has the potential to revolutionize power generation, especially with the growing demands of AI. But the article highlights that the U.S. seems to be lagging behind China in this crucial field.
It sounds like China is aggressively investing in fusion research and development.
Yes, and if they manage to achieve a breakthrough before the U.S., it could have significant implications for global energy dominance and technological leadership.
It's almost like a modern-day space race, but with even higher stakes.
Indeed, and this underscores the importance of investing in innovation and future technologies. The countries and companies at the forefront of these advancements will be the ones shaping the world of tomorrow.
So for our listeners looking for potential investment opportunities, should they be keeping an eye on companies involved in fusion research or related fields?
It's certainly an area worth exploring, but as with any investment, Thorough research and due diligence are essential.
Okay, now let's talk about a company that's already making waves in the present tier. Netflix MarketWatch had an article titled, "Netflix has won the streaming wars. Now what?"
Right.
That painted a very optimistic picture for them.
Their success seems to be tied to their ad-supported subscription tier. It allows them to cater to a wider audience while potentially generating substantial ad revenue.
It's a smart move in this increasingly competitive streaming landscape. It seems impossible to keep up with all the different subscriptions these days.
Exactly, and as a streaming landscape continues to evolve, it'll be interesting to see how other companies adapt. Will we see more ad-supported options, bundled packages, or entirely new business models? It's a dynamic industry.
Speaking of dynamic, let's revisit PepsiCo's acquisition of Poppi. The Prebiotics Soda Market Watch had a piece on this titled, "Pepsi will pay $1.7 billion for a soft drink company that got its start on Shark Tank."
It's a prime example of a larger company recognizing the potential of a smaller, disruptive brand. Poppi's focus on prebiotics and lower sugar content taps into the growing demand for healthier beverage choices, particularly among millennials and Gen Z.
And let's not forget the power of good marketing. Poppi's Shark Tank appearances and celebrity endorsements definitely played a role in their rise.
Indeed, sometimes it's not just about the product itself, but about crafting a compelling story and connecting with your target audience.
Okay, before we wrap up this part of our deep dive, there's one more story I wanted to touch on. Bloomberg reported on a potential record-breaking deal in India's private debt market. Shapoorji gets binding bids for biggest India private debt deal.
This is noteworthy because it signals the growing appetite for private credit in emerging markets. As traditional banks become more risk-averse, private credit funds are stepping in to fill the gap, providing capital to companies that might struggle to secure financing otherwise.
It sounds like a win-win situation. Companies get the funding they need, and investors get access to potentially higher returns.
In theory, yes, but it's important to remember that all investments come with risks. Evaluating the creditworthiness of the borrowers and understanding the terms of the loans is crucial.
So for our listeners intrigued by the potential of private credit, what's your recommendation?
Thorough research and due diligence are key. It's important to understand the specific risks involved in private credit investing and to seek out experienced managers with proven track records. If you're unsure whether private credit is a suitable investment for you, consulting with a financial advisor is always a good idea.
Excellent advice, and I think that brings us to the end of this section of our deep dive. We've covered a lot of ground from the VIX and market sentiment to the UK pension landscape, nuclear fusion, streaming wars, healthy beverages, and even a glimpse into the world of private credit.
It's been a whirlwind tour, but hopefully our listeners are feeling more informed and engaged with these diverse financial trends.
When we come back, we'll explore CNBC's report on how AI is being used in elder care in Japan and touch on a few other fascinating developments.
It's remarkable how technology is being applied to address some of society's most pressing challenges. I'm eager to delve deeper into that.
Welcome back to the show. Before the break, we were about to dive into how AI is being used to help with elder care in Japan. This was from a CNBC piece titled, "Japan Lacks Workers to Care for the Elderly. This company is using AI to help."
Yeah, it's a really fascinating example of how technology can be a powerful tool to tackle societal issues. Japan's facing a severe shortage of caregivers due to their aging population and shrinking workforce, and it seems like AI is stepping in to bridge that gap.
It's amazing to think about. Really, sensors and algorithms can monitor sleep patterns, reduce the burden of paperwork, and even personalize care plans.
Right, and it makes you wonder what's next. What other applications will we see in the healthcare sector as AI technology keeps advancing?
The possibilities seem endless, and it ties into what we've been discussing throughout this episode: technological disruption, global trends, and how they intersect with investment opportunities.
Exactly. Whether it's Apple grappling with AI, Google making massive acquisitions, or companies like this one in Japan finding innovative solutions for elder care, these are all trends worth paying attention to.
Speaking of trends, let's circle back to the UK pension funds and the government's push for them to invest more domestically. We were discussing the Bloomberg article. UK pensions investing 5% at home isn't enough, Aviva CEO says.
Right. The government's proposing a voluntary 10% allocation to British equities, hoping to stimulate their economy and support retirement savings.
But as we discussed, it's a delicate balancing act. While investing in domestic companies can be good for the local economy, there's also the risk of overexposure.
Absolutely. Diversification is crucial for managing risk in any portfolio.
So for our listeners who might have UK pension funds, what's the key takeaway?
It all comes down to individual circumstances and risk tolerance. If you're feeling uncertain about how these proposals might impact your pension, a good first step would be to consult with a financial advisor who specializes in UK pensions.
Solid advice. It's always best to have expert guidance when making important financial decisions now. Before we wrap up, I want to touch on a broader point that we've been circling around throughout this deep dive. We've talked about Apple, Google, energy markets, pension funds, nuclear fusion, even prebiotic soda. What's the common thread here?
I think it's the interconnected nature of the global financial landscape. What happens in one sector in one country can have ripple effects across the board.
And for investors, this means staying informed, understanding the trends, and being prepared to adapt.
Exactly. Don't just follow the headlines or chase the latest hot stock. Do your own research, seek out diverse perspectives, and challenge your assumptions. That's how you navigate this complex world of finance.
Well said. It's been a fascinating deep dive, and we hope our listeners feel equipped with knowledge and insights to make informed financial decisions.
Absolutely. And remember, we'll be back tomorrow morning with new headlines from major financial magazines. So tune in then for another deep dive into the world of finance.
That's all for today. Until then, happy investing, everyone.